Good morning traders, so it's Monday the 15th of January 2018. Just having a quick look at the markets right now. It is a US bank holiday today, so don't get too excited. Predominantly during bank holidays and Mondays you usually see irregular movements in the market, so use today just to pinpoint where you'd like to execute your trades and look for entries and exit points. So you should always have your trade planned before entering and before exiting. Therefore, no emotions will actually take control of you when the trade is in place. Okay, so let's have a look at the euro. We're just going to have a look at a couple of the major markets, because this is where I see a couple of opportunities after last week's sell-off in the dollar. So we're just going to go up to a higher time frame, up to the weekly. We'll see basically what we've got going on here. You've got the market came out of its trap zone between 114 and 108. We had the bullish move up. We were looking for the market to come a little bit lower in towards the 115s before moving up with some euro strength. Well, we've now seen the market break through 120 and breach 121. So it's the next move that we see is going to be up around the 125 barrier. So how can we potentially look for trading opportunities? So this is the way we see it at the Lifestyle Traders Club. Entries and exits are given during trading hours. It's not a signal service, but this is something that we do so that our traders that are part and parcel of the club can see what we're doing on a day-to-day basis and how we manage the trades. So we'll be looking for a pullback into the 121 to maybe 120.60 area before taking long trades up towards 125. I know that I'll be getting questions from many people that are watching these videos, and they'll be saying, well, why don't you take the market short from where we currently are back down towards current levels? Now, you can do that if you want, if you look at smaller time frames and look for a change in cyclical patterns. However, the way we read the market is we have a couple of simple rules, and right now where we're at, there's no resistance, no ceiling. Therefore, we will not be taking any contrarian trades. So first port of call will be pull back into this region, maybe even towards the trend line, depending on what we see and how the market reacts on a retracement. We'll be looking somewhere, anywhere. If we can get a combination of both, that'd be great, but it would be a very weak retracement and very slow processed if we are going to get a combination of the horizontal and the trend line. Ultimately, we'll be looking for price to come in here, and then depending on our trading style, whether we're end of day traders, intraday traders, price action traders, we cater for all of those, and we will give various options within the club on ways to enter the market, and then we'll be looking for trading opportunities up towards 125. Through here we did have a commitment to traders signal, which we were short. We did take some money and it was quite nice, only for the fundamentals in the marketplace to change, where we saw the sell-off in the US dollar. Predominantly that was down to Chinese debt and well, not Chinese debt, but the Chinese buying US debt, and the ECB December minutes came out. So on one side you had negative impact news on the US dollar, and on the other side you had positive impact news on the euro, which catapulted the market from, you can see, lows of 119 right through to 123. So a nice 400-point move in just a couple of days. If you're on the right side of that, that's fantastic. If not, there was also a lot of sellers here with the COT report highlighting a potential reversal in trend. So the next point, should the conditions still be the same, we would expect to see some kind of COT reversal around 125. That is dependent on positioning within the futures market. So that's something to look at in the coming days and weeks. Okay, next market we're going to focus on is sterling or cable. What we've seen here is something very, very similar, and it's broken through highs at 136, and the key area here really was getting a close above this wick over here. We can see that the blue zone here is what we were looking at for potential resistance, whether the market was going to hold or whether it was going to break through. We wait for our rules for entry before we actually take any trades. So we've finally got a breakthrough, so now we're going to look for the same zone to be buying this market. Question is, where could this potentially run to? Well, if we were just going to look on the last move here, if we're going to use our fibs and we look for the 27 extension, you'll see that this will come into the 139 even handle. Okay, so potentially we could see a run up to there before we see it sell off. Now, if that is the case, then as end of day traders, we're not going to get any sort of signal to be taking that market long where we currently are. If we get a pullback to 136, then there's going to be opportunity to 139 as a first target. Now, we're going to expect this to go a little bit higher. You see the red zone marked in. This is like pre-Brexit levels. The spike up here was the initial rally into the Brexit news where it was looking quite positive. It was the anticipation that the UK was going to remain within the Eurozone. And then obviously the unexpected happened and we saw the sell-off. So it's also a nice 50% retracement. So 145 is 145.50 is our sort of extended targets for this market where we expect it to run into. So getting long around 136 should prove a good trading opportunity for a good 900 pips if you've got the mental ability to stay within the trade during its fluctuations. If not, then it's going to be down to your trading style on how you manage that trade. I'm going to look at the dollar yen. Excuse the writing, it's looking a little bit cluttered in here now. So over the longer term, you've got a symmetrical triangle forming, and then within there you've got some major resistance around 114, some major support around 108, and then your midpoint around 111, 112. So if we break that down into a daily chart, you'll see we're currently sitting at our minor support or the midpoint. Now the question is, how can we look at taking a trading opportunity from this? The ideal scenario would be a pullback into 112s to take it short. You can see we had that highlighted back here. I'll just remove that now because it looks like it's potentially just going to sink through. If we're going to get a shallow retracement, it might come back to 111. That could be an opportunity to take short, but I'd be aggressive through this zone here, 110s. And then I think next stop is going to be, if we have a look through here, using our fibs, the 27, the 61.8, bring you down into 108. So it looks like 108, 109 is going to be tested again. And that would provide an excellent opportunity to be buying the US dollar and selling the Japanese yen. So essentially we're still looking at selling the US dollar short term, and it'll be a matter of waiting for your trading opportunity. We'll go to the Australian dollar now to have a look, and you know, we went long through here at 75.03. We took some money out along the way. We had 3 trades long through this point. We took most of our money off at this point, looking for a confirmation of a breakthrough, because we'd made substantial gains. We left a small proportion of our trade on and closed the rest of it through here, only to see the market continue to the upside. You know, I'd love to say that you're always going to get the most out of every trade, but that's not the case. We were looking for a pullback into 77.50 area to then go long and hit our ultimate target around the 8,000 barrier even handle. So that could still happen. So we're sitting on the sidelines. If there are any intraday trading opportunities, this is a market worth buying, running up towards the 8,000. Last but not least, we're going to have a look at Kiwi, and this is another market that we traded long from. The key area of 68.50. We had a couple of trades running through here. We took some money off through this here at the 61.8, and the rest of the money we closed off on this day here. That was our target, just below the 7,200 barrier. We've broken through, and it's running as anticipated. However, we'd like to see a pullback now into 72 before taking the market long, and I think we could see 7,500 reached again as the dollar continues to sell off. Okay, so that's it from Trade and Train, the Lifestyle Trader today. If you do have any queries about these trading opportunities, you can mail me at mark@tradeandtrain.com. And if you're looking to join the Lifestyle Traders Club, I'll put a link below, and please just click on the link, and we look forward to seeing you in the club. Have a good day.